Welcome in. You're listening to a daily editorial here on the KE Report. I'm chatting with my good friend Jordan Roy-Byrne, founder and editor of thedailygold.com. And Jordan, we're going to chat about a recent post that you put on your website actually just yesterday that I will post a link to because we're going to kind of go through the charts that you identified. The title of the article is Precious Metals Bull Analogs, and it takes us through these different analogs that you like to outline to kind of correlate rebounds and, well, bull markets for gold in the past compared to what we're dealing with right now. The first chart that you outline is this gold bull analog, and it outlines two positive outcomes if gold does follow along with what happened in the 1985 through 1987 run and in the 2001 through 2004 run. But then there's also this 1993 to 96 gold move that actually kind of flatlined around this time where gold is trading compared to, well, the historical time frame that we're looking at. What's your assessment of maybe what type of a bull market we are in when we look back through history of other gold bull markets?
Well, Corey, that's such a great question. Initially, as I told you, I was thinking as we got to the end of the bear market, gold would be in this, it would be due for a rebound similar to 2008 or 1976, which are the two strongest rebounds gold has had. And they were very strong rebounds that just kept going higher and higher even after the first 3 or 4 months, which is a pretty strong rebound. But now that we're 18 plus months past the bottom, I mean, it's clear just from looking at all the analogs, and I have a chart with many of them, just more than these three here, but I wanted to just show the three because these are the three that make visually or the best comparison. It's not even close. So with the benefit of time, we can see that the path and the structure of this rebound over the last 18 months is most similar to these other three. And stepping back, it makes a lot of sense to me because if you compare the recent bear market, I mean, it was long, it was very bad, obviously, and at the low, gold's valuation. I mean, if you look at how much money was in gold, gold relative to stocks and all these various ratios, I mean, gold was so oversold. I mean, as we know, the gold stocks and gold miners are even more oversold. But that showed a lot of similarities to the 2001 low. And then if you look at the fact, well, I mean, gold had a strong decade and then a significant bear market. I mean, that comparison to the 1985 low, I mean, that makes total sense. So it's not just the fact that this rebound looks like those other two bullish ones. It's the fact that when you compare the valuation of the market and kind of what happened before the bear market, it makes a lot of sense to be compared to those two. Now, as you noted, I mean, there is one bearish scenario here just in case gold kind of falls off and it can't break out. I mean, it's good to include all relevant scenarios, but it's difficult to see. But if you look at what's happened over the last month or so, gold has pushed higher and it's pushed past that 93 to 96 week bull market. I mean, if gold were going to follow that, I think gold would not have broken above 1300. So I definitely think the recent action favors those two bull markets. And I mean, it's hard to say. I mean, no one can predict the future, but I would probably lean more to the 2001, 2004 scenario because the 85 to 87, of course, there was a long bear market after that. I think gold is set up for, potentially a multi-year bull market beyond just 3 or 4 years. I mean, maybe it has a brief bear market after a 3 or 4 year run, and then it moves higher again after that. I mean, we don't know. That's just speculation. But coming back to the here and now, if you look at the technicals on gold, I mean, we know that there's obviously this bullish base, this bullish bottom that's been developing for the last 3+ years. And there's resistance now around 1350, 1375. I mean, you can call it 1400. But if gold can get above that, there's a real thin resistance zone up to 1550. And in addition, if you just look at, there's kind of a very complex head and shoulders bottoming pattern in gold that's developing. And that potentially, if gold were to break above 1375, that projects to as high as 1700. So if you're just looking at the chart and you look at those things and then you compare them to these analogs, both the bullish analogs show that gold could reach around 1700 about 12 months from now. So again, we can't predict the future. We don't know what lies ahead, but when looking at these factors, it makes a lot of sense that if gold can break above 1375 and get into that thin resistance zone, then it's going to be positioned for, a nice move higher, even beyond just that initial break above 1375.
So again, there is a lot of room for gold to run. It just needs to break this next resistance zone. And hey, 1300 took a long time for it to break, so who knows how it's going to react around 1375. But there are two other charts that you outline here, one being the gold stocks bull market that takes a look at the Barron's Gold Mining Index, and also the Junior Gold Index. These charts really, I think, do a great example of showing how early potentially we are in this bull market and just how much room there is appreciation-wise for the stocks to run up, especially later stage in the cycle when it's about halfway through these analogs that you see the charts really start to move higher. Take us through why these are so aggressively moving up at the end of these analog charts.
Well, I mean, at the end of bull markets, in the majority of cases, they tend to, I don't want to say everything goes vertical, but you can see very strong gains at the end of bull markets because sentiment tends to get really optimistic. And then you can potentially get a vertical move. I mean, we have with the gold stock bull markets, we obviously saw that 1980, and then the two that are vertical towards the end were 1970 to 74, and then 76 to 80. I think that the 2016 low is probably most similar to the two long bull markets I'm showing there on that chart. The lows that we had in 1960 and 2000. And those bull markets were kind of more steady, and they didn't really accelerate until the end years. So that's, but look again, what's interesting is looking at the price and how much all these bull markets go up. Based on the Barron's Gold Mining Index, it's about sevenfold. So if we start at 100, the current bull and the BGMI is around 200. And if you look at, history, these things tend to go to 700. So that's important to keep in mind. But one comment, I like using the Barron's Gold Mining Index because it's the only index that goes back decades. I mean, if you look at like the XAU or the HUI or the GDM, which is the parent index of GDX, if I were to show that analog only comparing the current rebound to the ones that began in 2008 and then 2000, we would actually, the current bull in the gold stocks would actually be behind those other bulls. It's interesting because if you look at the BGMI, it looks like it's slightly ahead. So, that's one problem with gold stocks is that, there are some indices and it's hard to get the data, but they're really, they can really be all over the place. Again, if you look at the BGMI, it looks like we're ahead of the path of the other bull markets. But as I just said, if we were to run this chart and use the common indices like GDX or the Huey, those would show that we're actually well behind those past couple of rebounds. And so to me, my takeaway from that is, well, if gold is going to make that breakout that we talked about and have that very strong move higher, that's when you could see the gold stock indices of today really start to play catch up.
So Jordan, is a general takeaway from what these analogs tell you, to me at least, it shows that we are potentially very early cycle in a new bull market. But nothing is for sure. Yes, history does repeat itself, and it does seem like we are getting more and more interest coming into the market, but still investors seem skeptical, and maybe that's why some of the charts here that you have presented do show the other case, which could be a flatlining of the gold price. But overall, would you say that you are optimistic, that you're following along with a lot of these analogs, that this could be a multi-year run that's ahead of us?
Yeah, I am optimistic. I think gold being able to break above 1300 was a very good sign. And looking at the way the stocks have been acting, if you look at the TSX Venture Bull analog chart and then also the bull analog of my junior index, if you look at those, they look like they're they're acting like they're in a bull market. I mean, we've had a long consolidation for about a year, but if you look at, these indices, they're consolidating around relatively close to their highs, not at the highs, but relatively close to their highs. So they're holding recent gains. And if you just look at how nasty the previous bear market was, both in the metals and in the stocks, I mean, that just has to be followed by a bull market. I mean, there was a scenario where we could see a double bottom, where we could have had this correction and gold could have come back down and made a double bottom, but that's obviously not going to happen at this point. I think just the takeaway, Corey, is just the significance of that resistance in gold at 1375. Look, if gold is not going to break that in the next 6-9 months or a year, then obviously these analogs, the history that it shows, is not going to pan out in the next year or two. However, if gold is going to make that breakout, then these analog charts are going to give us a very good path of what could come in gold. And finally, I mean, I just love the junior gold bull analog chart there, and that just shows potentially, if you look at the other two, the rebounds or the bulls that began in 2001 and 2008, about, a little bit, almost 3 years, but a little bit less than that into it, they peaked around 13 to 14 times. And if you look where the analog is right now, it's just above 3 times. So it's above 300 on the scale that starts at 100. And, you would look at that and think, wow, that's a massive move higher. That's more than 4x from here. How could that happen? Well, if gold is going to make that breakout above 1375 and run up to 1700 in the next 12 or 18 months, I mean, that's how you can see that kind of massive gain in the juniors.
No, well, interesting comments here, Jordan, and I do recommend everybody following that link, checking out this article that Jordan wrote. It has the outline of all of these analog charts, and you can see just where we potentially stand in this market. And again, focus on those stock-focused analogs, because those really have, to me, the most optimistic outcome. But again, not sure exactly what's going to happen, but good to hear that you're optimistic as well. Thanks for your time, Jordan.
Thanks for having me.